Well, hey guys, welcome back to another episode of Stock Market Review with Lou Web Trading. Obviously, my voice is horrible, guys. It is horrible. Yesterday, I could not make it. Yesterday, that's how bad it was. But tonight, I'll give it everything I got. Is that gonna be enough for you guys? I don't know. If you can't really hear me properly, please let me know. Again, if you are here, please make sure to smash the like button, like, drop me a comment, give me a thumbs up, anything. I would really appreciate that because those engagement really help the channel. I'm showing up for you guys. I'm making sure I'm doing my best to keep showing up. I need you guys to show up for me. All right, so give me a thumbs up. I'm sick out here. I'm making sure I'm showing up for you guys. Empire Path, as usual, I see you here. So thank you for being here. And for everyone that is here again, I appreciate you guys being here. Just remember to smash the like button for me. Again, those engagements are really helpful. If you are watching on replay, I know, and I've seen the numbers about nearly 70 to 75% of you guys are not subscribed. I do appreciate your support. I do appreciate the views and the comments and everything, but it would mean a lot to me if you guys can subscribe to the channel, share the channel with somebody else that may be able to benefit from it as well. As usual, I try to come here to give you guys the most in-depth technical analysis that I can give you so that way when you go into the market tomorrow, you're ready. You're not caught by surprise. As far as directions, you have the higher probability, and nothing surprises you, right? As you coming in, it is unfortunate. Yesterday, unfortunately, I could not make it because I would have been able to warn you guys, and I want to touch on that just a little bit because it seems like there's a few people that I've heard from who did not know how to spot when the market is really letting you guys know. Beside just the technical analysis of the Qs and the S&P 500. By the Qs, I mean the Nasdaq or the S&P 500. There are other clues that you can look at to see exactly put things together. It's like pieces of puzzles, right? You find all these different pieces here and there that you put together that gives you a bigger picture. This is one of the way you can see what most likely might happen, even when you don't have a very clear setup or very clear picture of where the Nasdaq is going next. Now we had inflation data showed up, CPI data showed up. It was around 3%. That is very hot. It was as it in line with expectation. Nonetheless, that was still very high. It is surging. That's what we predicted. We were hoping it came lower. It did not. It came as expected. It wasn't harder. But this is one of the reasons we also pushed down. But even though we did not get this number yet, we should have expected a move down. It was not very hard to really see. We most likely was going to push down. And guess what, guys? We had that push down. Now, the other thing that's lingering on the market again is this whole should of Hormuz being open, closed, not open, ceasefires on the brink, and all this kind of stuff going on. But you guys know what it is when we are here. This is straight charts, no BS, no flops. We're gonna get into it. We're gonna keep look at the technicals and see what the technicals are pretty much telling us. As usual, guys. Excuse me. Nothing I say here is any suggestion for you guys to buy, hold, or sell. All right. This is for educational purposes only. Excuse me. And if you guys do want to trade, make sure you do your own due diligence or contact a financial advisor. If you are not sure, you don't know what you're doing, highly advise you guys to really connect with somebody who can teach you how to trade or connect a financial advisor because trading carries a lot of risk, including loss of capital. So trade at your own risk. All right, guys, we're gonna dig right into it. Again, I'm going to be off camera. I've done that before. I want to do the live. I want to be here for you guys. But I think it is best with the way I'm feeling currently. Every now and then, I'm just gonna come out and say it. Every now and then, I'm going to cough and I'm also going to pull out my water jug and drink some water. All right. I don't mind doing it on camera, but you know what? Out of respect for you guys, I'm just gonna do it off camera. So that way, I'm gonna go off camera just so I can do things like that. All right. Let's see right here. Don't know why this is not going to just bear with me for one quick sec, guys, because as of right now, I have my input is deciding not to show up for whatever reason. So let's make sure we get that straight. Here we go. There you go. Actually, I have to remove the camera. Perfect. All right. Now we're cooking with gas. Now it's time to roll. We are going to start with the S&P 500, guys. S&P 500. Today we had a deep pullback. Well, not a pullback. Intraday we had a big intraday drop, but then we actually recovered. We closed near the highs. That was a crazy move. Again, yesterday you guys can see the buyers are losing a bit of momentum, but this was like a fake out. This was a classic bear trap. I mean, typically you get a bear trap the next day, not intraday like that, but bears are trapped right now. And once the market started to rally, and again, I tell you guys, buying puts and shorting the market is used as fuel for the market when it's going up, because the only way for you to close your short position is to buy. So that means now you buying just as everyone else is buying, which gives the market fuel to keep rising a lot higher. And that's what we did. As of right now, with this current candle, that looks like we might actually even have a squeeze. So let's dig in a little bit just to see exactly what's going on. This is the 4 hour time frame. 4 hours. Again, all we did was come down and hit the 21-day moving average. So we never really lose that support level. Came down, bounced on it, and guess what we just did here? That was a big engulfing pattern, and right now we are still looking good. But I don't want you to guys to get complacent, because right now this is the line in the sand right now. Until we've broken this level, you have to be wary of a possible double top and a move down. So we have to be very careful at that. And right now we you can see where we close. We close right here, right? So are we going to gap up tomorrow? Which is possible to happen. It's looking a lot likely as of right now. We can gap up tomorrow, but when we get to this level, what how exactly does the market react? How is it going to react? Because right now this is our major, that's our current resistance. That's the all-time high line. Once we get to this level, we have to see how the market is going to react. And again, I have to remind you guys, this is a warning. All right. Now, is that going to be a bold flag where we're gonna squeeze and make a higher high? It is possible. We are going to squeeze, make higher highs, but it is also possible that we're just going to make either a lower high or just right there and just boom, we drop. All right. We have to really pay attention to that as of right now. Let's dig in the 2 hour time frame. Again, the 4 hour is looking good right now. The 2 hours is also looking good because why? Because we reclaimed the moving averages right now. We have reclaimed the moving averages right now, but you also have to, as you go lower in those time frame, now put a trend line until we break this. If we can break that downward trend line that we have in the 2 hour time frame, if we break that, our next level would be 740. Again, this would be right here. We have to go and break that around 738. 740 would be our next battle. All right. So we have this bit here. Again, if you are trading options and you have about a $2 range to work with, you can make good money with that. All right, as long as you know how to properly buy your options with strike price to buy and how many days, whatever it is. If you're trading intraday, you know what you're doing. You can still make some good profit on that. Again, if we are looking at the if we are looking at the 2 hour time frame, the 2 hour time frame actually looks okay. Let's check the 30 minutes, see what it's doing. This is the best case for a squeeze. What exactly is the best case for a squeeze? I already said that to someone in the live chat while we were trading live. I called that out. I said, hey, right now it seems like we could do an inverted head and shoulder pattern and make that squeeze up. All right. So meaning this is right now this is the left shoulder. We cannot lose this level. So this would be our level of support. If we lose that level of support, that means most likely we are going to push down. But if we can break above that level, and you guys can see, I'm putting in I'm just putting in my alert, so in case anything happened right at those levels, I know exactly what's going on and I'm already alerted. So these are things I will be looking at directly. The bigger push, to be honest, most of the push actually happens in the AI trade. So we had Micron, SanDisk, like those companies, the semiconductor trade. They took a beating today, but they recovered very, very well. So a lot of buyers were just sitting there and just waiting. All right. Now, before I move on, so that's the cues. Again, based on what I'm currently looking at, I'm going to say the higher probability on the cues is actually a move higher. At least early in the day, unless we have some sort of news that comes out and things like that. This is one of the things we will be looking at. Now, I want to remind you guys, in case you forgot, for some people that was unaware of that possible drop. In case I'm not around for one day, guys, you guys get it, right? How did I know? Most likely we were going. I should have. If I was yesterday, I would have told you we're probably going to squeeze higher. This little boy right there. Remember when I talked to you guys about the VIX? So for the volatility index, whenever that rises, the market pushes down. All right. Now, why did you guys see it? I gave you guys this zone right there. That's the zone. This is a nice little zone of support. So what did it do? It bounced off that support level, and this is the candle that it gave us yesterday, which closed above the 9-day moving average, closed above the 9. That was the daily. But again, I'm gonna go on what we are seeing currently. But again, this is how this thing closed. This was an engulfing pattern that actually closed. So that like that. On top of that, so that showed you we had this additional push. And again, if you actually dig in and you look at it, what did we have here? In the 4 hour time frame. Left shoulder, head, right shoulder. Inverted head and shoulder pattern, and we squeeze. Right now, this is exactly what the S&P 500 is doing, or that's what the SPY is doing. You guys should be able to see that. All right. I just wanted to cover that real quick. Now, why do I think most likely we're gonna have a green day tomorrow? Look at that. Look at that rejection candle. This is like an engulfing pattern, but on the downside. So we got rejected and we have some space to come down. How high is the market going to push based on that? I do not know, but this is what we can see right here. We can see that. All right, so that's what a highly more as far as the likely move to happen, the higher probability that would be the VIX keeps squeezing down. Maybe it's gonna come down and retest that level down to 1746. I don't know how low it's going to go, but this is what I'm looking at. You look at the 2 hour time frame, we actually crossed down in the MACD. You can see it. We're pointing straight down. We should be squeezing down earlier in the day or maybe pre-market. Hopefully, no big moves happen in pre-market to resolve all that issue where it push it all the way out in pre-market, already find support so it can bounce right at the open. Again, taking a look at the 30 minutes not really giving us anything, right? And if you actually look at it, what did we just do here with the 30 minutes? Boom, boom, boom. A double tap and we push down. This is why I'm telling you guys to be careful with the S&P 500 because the S&P 500 could very well do something similar tomorrow. So we might be green earlier in the day and fade. So this is why we have to be careful and really watch what exactly is going on. All right. So this is what we got here. If we take a quick look at the Qs, the Qs took a beating, but then again we recovered. So we got a bit of a doji with a long bottoming tail, which is well, that caught me off guard. So this is what we're looking at with the Qs, possibly going to squeeze, guys. I think I push this as much as I can. Um, oh, guys, I spared you guys so much by just going off camera right now. I think I push this as for as much as I can, guys. This is about all I can give you. This is about all I can give you, guys. I cannot give you any more. That's all I have, man. I'm really losing my voice, and I'm starting to cough a lot more. So I'm gonna wrap it up here. Hopefully, just giving you guys what the Qs is currently doing, and also what the VIX was doing, and the S&P 500. Maybe that can give you an idea of how to trade tomorrow. Again, as usual, trade responsibly. It's a process over profit. Follow the process. The profit will follow, and don't do anything stupid, guys. This is not a marathon, right? It's not a. I mean, it's a marathon. It's not a sprint. So remember, base hits builds accounts. You don't need to make 5,000, whatever you seeing, all this BS you seeing on social media. Some people are making that, but most people are faking it. Most people are faking it. You need to understand that. So again, or even the people that are making it, when somebody said they made 20 or 10K or 40K today, don't compare that to how much you made today. Compare that to what percentage of their account does that represent. All right? Because unless somebody has a really large account that gives them something like that, you guys might get lucky every now and then. There's nothing that's not something that's crazy to happen. It can happen. You might hit a home run, something went crazy or whatever. That can happen. But it's also what size account does that person have, and what size account do you have? Because if, for example, hypothetically, if I have an account with 100 grand in it and I make 10,000, that's 10% of my account. If you have an account with 5,000 in it, to make 10,000 profit, you have to make over 100% return. Like that's a completely different ball game. So I need you guys to run your own race. Focus on yourself. Don't let social media, cloud and all these things got to you. By the way, I want to say congratulations to one of those guys in the chat who passed, who got a funded account today, passes val today with Apex for 150K accounts. Again, guys, I have a system that I teach. This is how I trade. We have something that we follow. As long as you follow it, it is pretty simple. And I will remind you guys once again. I know I've been under the weather. I've not been able to really go over the indicator I just created. I'm giving some trial access to as of right now. But if you are interested in that, please feel free to reach out. I haven't been well enough for me to either make that video or come on the live and really walk you guys through it. But if you are interested and you want to reach out to me again, drop a comment in the on this video, or just reach out to me. Shoot me an email. My email is always on the description. Reach out to me. I'll get to you guys, or drop me a comment on YouTube or on the video. I will get back to you guys. I give it all I have, guys. I can't give it anymore, guys, because right now I have the urge to cough so much that I'm fighting back. Like I'm getting teary eyed. That's how bad it is. You guys take care. Have a good one. Best of luck tomorrow. Again, remember to get in, get green, get